Good afternoon, everyone. I'm Charles Payne. This is Making Money and Breaking right now. All right, stocks are rising to kick off the final week of August, but there's so many questions and, of course, so many worries, some legit, some not so legit. We're going to break it all down for you. We got some of the best in the business. Gary Kaltbaum, Ken Fisher, Michelle Snyder. They're all on deck. Oh, let's bring in a Market Gauge, their chief strategist, Michelle Snyder. Michelle, I'm keeping this chart up because you know, it's been a battle all year long. So many folks have said, okay, buy small cap value. And there's been reasons for it, whether it's valuation, whether it's this, whether there's simply due, but it's large cap growth that keeps outperforming. How do you trade in an environment like this? Do you go with the winners or do you try to pick something out of the losers?
Well, there's actually two parts of the small cap stocks. There's those that are really heavily involved with the index itself. And yeah, they've been beaten up. And then there are those that have had strong earnings growth, a company like Celestica, for example. And so within the small caps, you kind of have to pick and choose. And that's what's making it so difficult because people are so index oriented rather than looking at the individual areas of it. And that's kind of how we've been playing it, is finding those that have done better. Some of them are semiconductors that are in small caps. By the way, some of them are home builders. Some of them are staples. So, yeah, we're really been cautious, but we're in cash in terms of the index-related small cap stocks.
I got you. Hey, I put up a chart here. It's the bonds, and this is really amazing. Talk about something that's completely blown away Wall Street. This is the stocks in relationship to bonds. This is the most outperformance ever, stocks versus bonds, and yet 95% of the guests that come on say you've got to load up on bonds right here. Essentially, I guess what they're saying is that the stock rally is going to stall or maybe pull back, but for sure bonds are going to go higher. So your thoughts on this potential secular bond bear market? Is this a bear market or is it a great buying opportunity?
Well, I think I got a little bit burned in thinking that it was a buy opportunity a few weeks ago, so I'm much more cautious about it now. And yeah, what you're really talking about is those alligator jaws where things get so stretched, people just assume that those jaws are going to smack together. But really, if you look at the bond market right now, clearly in modern times, this has been one of the worst performances. The bounce off the lows, which really goes back to the October lows, has been sort of meh. Certainly the Powell-Jackson Hole conversation was not really making anybody feel like the bonds have bottomed out.
Right.
But people are saying, 5.5 to 5.75%, maybe it's tapped out. You know, there's a double-edged sword. It's really good to have the S&P outperform the bonds, and the junk bonds have been outperforming the long bonds as well. But from a technical standpoint, we're right here at a precipice. Under 95, I would think more secular bear market. And if we can hold here and get back through, say, 98 in TLTs, perhaps those people can take a victory dance.
All right, 30, 40 seconds. Just what are you looking at specifically? What are you buying or what's at the top of your watch list?
Well, we're still very much into some of the plays that have to do with the manufacturing. We're still very much into chemours. We actually added to that position. I mentioned some of the earnings growth in the small caps. And also, I still like gold here. I think gold has been doing amazingly well in the face of a stronger dollar and higher rates. So it's telling you something. And through this 1950 level, we could see a nice big pop there as well.
All right. Well, it's nice seeing you, Michelle. Thank you very much. Always appreciate you sharing your knowledge and your wisdom.